Welcome, welcome. Godric here, your stock market mentor, November 29th, 2024, Friday, last day of the month. Hope you guys had a great Thanksgiving holiday. Sorry, I'm a little late. Better late than never. I got some pictures for you in the background. Dow Jones plus 292. All-time high, 45,014 today. So why that's important is because an all-time high means we're in a bull market. We broke the record, and we're going to another higher record. The Dow Jones, however, is just a group of 30 stocks, but they are mostly considered the top brass. You know, there's Microsoft there. You know, there's NVIDIA there now. They got dividend stocks. You know, Walmart, McDonald's. So, we are in a bull market. If you're making a lot of money right now, congratulations. But it's not so much that you're smart. It's that we're in a bull market. Everything's going up. If you're not making money right now, you're probably doing something drastically wrong. Because most all the good stocks are going up and up. Welcome, you guys. I appreciate you. Curtis, welcome. Annie's. Daniel. You guys getting my likes up. Tap that screen. Pat, pat, pat like a video game. Let's get at least up 10,000 right now as we start out. I'm going to go for about an hour tonight, maybe a little less. I have a couple trades for you. I want to show you a strategy or two. And I'll take your questions. If you're subbing, it's only $5 a month. You can come up and ask questions. Welcome to subs that come up on the live. Give you a spot to talk and see where you are. Here, I have a 10-year chart on the Dow Jones. It's pretty standard 10-year chart, but it's important because look at how nicely we're just going up, just like magic, just going straight up. There are some dips, obviously, but they've come back and gone higher. We could have another dip, so be prepared for that. But long term, the good stocks will always go up. And there's always good stocks going up, even if it's not a bull market. Welcome, guys. Dakota. Mad Moose, welcome. Eric. Brian. Okay, yeah, hit those likes for me, guys. Appreciate you. And if you can give me at least 2 shares during the live each, yeah, hang out with me tonight for an hour. Give me 2 shares each in the bottom right corner. If you want to throw me some gems up there, I won't say no. Throw me a crane or 2 if you gift. Appreciate that. Put your questions in here. I'm going to start, but I will try to answer all your questions. If I miss them, I apologize. Try to put them in again. Subs know that I always get to your questions. You already know if you're subbing. Even if I have to DM you after the live, I'll get to all your questions. So, if you guys have a ChatGPT, one question you can ask is list the Dow Jones stocks, just like the top brass 30 stocks that make up the Dow Jones Industrial Average, and together they put that number behind me, 45,000, all-time high today. We'll probably go higher. We have a classic Santa Claus holiday rally right now, so probably going to be another 1,000 points or so. Probably going to be up Monday, and then a nice positive December, and probably go positive until through January next year. The economy is robust. Things are going well. Compared to the world market, we're doing pretty good. We're doing pretty well. The U.S., I mean. Yeah. Okay, so that is the Dow Jones. Let's see what else I got for you. Let's see what I got here. Okay, IWM, Russell 2000. This one I want you guys to write down. This is your studies for tonight. The IWM or the Russell 2000 are the like the mid caps and smaller stocks. Actually, the Russell 2000, let me take that back. These are the top stocks, the top 2,000 stocks, but including the mid-cap and small-cap stocks, the top 2,000 stocks. So write that down, IWM, you can invest in that. And today it's $2.40 and 95 cents plus 33 cents. You can buy a few shares on the IWM. That's diversified. That's like 2,000 stocks diversified. They take a very small fee. You don't recognize it. It's like less than 1% a year. And then there's options on that. You want to buy a couple of call options, for example, on the IWM, you'll probably do well. If you look at the return, I put an all-time return. It's showing from 2000. I think that's when they started. The year 2000, so it's 24 years. It has a historical price of 51.68. Let me do some math now, okay? It starts at 51.68 24 years ago, and now it's 240, okay? So what we do, let's pull a calculator out. We're going to look at the return on that. How much money would you have made if you were in the IWM from 2000? So we go 240, which is the current price, 240.95. Do the math with me. Divided by the historical price of 51, which is 24 years ago, 68. 4.66 fold. 4.66 fold return. So your money's doubled between 4 and 5 times on that one. So that's a good return. Now let's look at a couple more. This is the Russell 3000 ETF. Now this one, that's not showing the historical. Okay, now here's the Russell 3000 historical. Now this one, the IWV. Write that down. This one's 344. Now the difference with the Russell 3000 is it has just the small cap and mid cap stocks, not the big cap stocks. So without Microsoft, without Google, without Amazon, small cap stocks like Fresh, what is that? That grocery store, Sprouts. Sprouts is one of them. Let me see. Sprouts stock symbol is SFM, Sprouts Farmers Market. SFM, and that's a good stock. That's on the Russell 3000. It's not a big cap stock. It's like a mid cap stock. That one is 154.48 today. SFM plus 251. So This one's also diversified. You're invested in 3,000 stocks, lower bracket. And let's do the math on that, shall we? Historical price $78. So we're gonna do 344.09 divided by 78.97 equals 4.35 times. 4.35 times return for 24 years, which is pretty good. You can buy a few shares of this IWV for $344 a share. It's called the ETF, which is like a fund. Or you can also buy like a call option. Call options are more risky because they can evaporate to zero, whereas the shares are more solid because even if the stock goes down, you'll still have that share there, the share value there. It'll be less, but it won't be zero, which is what a call option can be zero. I think we have one more. I'm gonna show you. Let me see. I did some math for you here. Here's the I was doing some math here. Here's the other one. Here's the IWB. Now this is the Russell 1000. Now this is the top 1,000 stocks. You know how I said that Dow Jones is the top 30 stocks? This one here is the IWB. IWB rather, top 1,000. So this includes Microsoft and Apple and Google and Amazon, but also the low some mid-cap stocks also are in here. And this one is $3.30 a share, $3.30.61. And let's do the historical return on that. You go $3.30.61 divided by the historical price of $76.69, which is 24 years ago. 4.3 times return, 4.31. So they're all a pretty nice return. You can see the chart behind me. I mean, if you're in this chart, if you're in this bar going up over time, you can't really lose too much money over time. They pick these stocks with like different criteria, with like revenue and profits and sales and volume. So again, you got IWM, which is the Russell 2000. Which is the large cap and mid cap and small cap. You have this one, the Russell 3000, which is just the small cap and mid cap, excluding the top stocks. And that's IWV. And then you have this one, IWB, which is the top 1,000 stocks, $3.30 a share. If you wanted to look at the volume too. This is how you can tell which one I like to invest in. You have here market cap. It's kind of cut out, but it shows 41 billion on the bottom. IWB. So that's a nice market cap. Over here, this is a SPY. The SPY is the top 500 companies. Let me get to that in a minute. I just want to show you the volume here. The IWV is showing 18 billion, so less. That one's not as popular. And the big one is the IWM, I believe. Yeah, the IWM is the big one, which is the Russell 2000. So the IWM is showing 67 billion volume. I'm sorry, 67 billion market cap. So that's the big one. That's a great one for diversifying. If you guys are just starting out, you want to put your money into some stocks. This one's going to give you basically the top 2,000 stocks. The top 2,000 echelon. Diversified, IWM. 240 a share. The chart is behind me is doing great. It's a great return. And we can look at some call options. Let me log into my account. Questions? Thank you guys for the likes. Let's get these likes up to 1,000, please. Knock up those likes to 1,000. What's your trading strategy? Thank you, sir. What's my trading strategy? Well, right now I'm just showing you, if you're like a novice coming into the market, some of you guys are new, you can buy some of these ETFs, which is going to give you diversification and also a good return over time. You can see. This is like a long-term share growth, just buying a few shares and then riding the wave up. The one I recommend of those three is IWM, which is this one here. It's showing 67 billion market cap. It's 25 million average volume a day, which is great. Has a small yield, 1.1%. I won't say no to that. That's a dividend. And then I was going to show you the next thing, which is a SPY. Oh, wait, let me look at the options on that, can we? You guys who have a stock market account, you can pull up your option chain in the research under trade research stocks. U.S. markets. I just do U.S. I don't do other countries. And I just do stocks. I don't focus on crypto. I just do stocks. That's my specialty. IWM. IWM. The investment seeks to track the investment results of the Russell 2000 index, which measures the performance of the small capitalization sector of the U.S. equity market. The fund generally invests at least 80% of its assets in the component securities of its underlying index and in investments that have economic characteristics that are substantially identical to the component securities of its underlying index. La-di-da-di-da. And then, so here, just to show you the call option, like if you hit options, and I like to, for call options, I like to go out like a year. Never buy call options for next week. That's just gambling. You want to have time for your option to mature. So we're in November, right? November, December 2024. So we go to 2025. January. IWM. Pull up the option chain. Okay, so now, if you buy the option at the money, okay, which is a choice you can do, 244, you have an option for 1 year for January 2025. It's going to cost you $540. Is that right? Oh no, I screwed up. We're going to go, this is next month. We're going to go a year, right? So it's actually January 2026. Sorry. Got you guys excited. Only $5 for that. You know that was wrong. Okay, so the 240 for a year out is going to be, the 240 is going to be $25. So write this down. IWM 2026 January call. The 240 strike, 25 by 30 actually, so even more. We have to pay the 30 because we have to pay for the ask. So it's a bid of 25, ask of 30. And if we sell it, we're getting the bid if we sell it. So if we buy it for 30, that's $3,000 because a call option indicates 100 shares. So it's times 100. So that's $3,000 to buy it. If we sell it right away, we only get $2,500. So we lose automatically $500 just buying and selling it. At least That's what it's showing here. It might tighten up. That spread might tighten up when the market opens on Monday. But according to this option chain, it's a wide spread. And that indicates it's going to be tough to trade that. But if you think about it this way, you buy a few shares for $244, no problem, or $240, right? 100 shares would cost $24,000. $240 a share times 100 is $24,000 for 100 shares. So people buy the call option because it gives them control of 100 shares of the stock. That's one way. And in this case, 1 year call option is going to cost $3,000 on the IWM. So you can buy 100 shares for $24,000, or you can buy one call option 1 year out of the 240 strike, which is at the money, for $3,000. So it's like 12% of the cost of the shares. Let's see. $3,000 divided by 24,000. 12.5%. So for 12.5% of the total cost of the shares, we can buy the call option. And for $3,000. And then if the stock goes up, right, the call option will go up even more, like a higher, has leverage, basically, put it that way. So it's almost like you have 100 shares, but not quite. But you're going to get leverage on that option. If you have 100 shares and the stock goes up, the IWM stock goes up 1 point, you'll get $100. So it goes to 241, goes to 242 actually. It's already 241. Monday, you're going to get $100. But if the call option goes up, the call option will go up maybe 50 cents, which is $50. So you get about half of the return. So not the full return, but it is leveraged. That's why you buy a call option. And if you can go out farther. Let's say we buy the 240 for next year. Let's say buy the 260. That's going to be $17. The 260 strike is 1726 by 1769. So 1 year out, the IWM, which is a diversified investment of the top 2,000 stock or the bottom 2,000 stocks, is about $1,700 for the 260. But here's the deal with the call options. Come next year, actually 2026, if this IWM has not gone up past your strike price, the whole thing is worthless. It only has value if it's in the money. Write it down. Call options only have value if they're in the money. ITM, in the money, which means has to be above 240. If it's a 240 strike, has to be above 240 the shares. If you buy the 260 strike, the stock has to be above 260. Does that make sense? Write that down. And if it's not, basically your option could be worthless. Whatever $3,000 could be gone. So in that sense, it's better to buy the shares. It's more safe, But you're putting $24K for 100 shares instead of $3K. So that's the trick. You're putting less money. I always say options are how you control a stock with less money, but more risk reward. Make sense? I always say options are how you control a stock with less money, but more risk reward. Make sense? So that's the call option for the IWM 1 year out. I recommend going a year out. Gives you a whole year to trade it for it to go up. A lot of you guys make the mistake of buying options for next week, next month, and then the stock can go down. And then because your option's out of the money, worthless. That's why I teach to sell options. Why buy them? Sell them. I do both sides actually. Questions on that. What's your opinion on the stock ALGS? Dom. ALGS by Dom. Let me see if I can pull another one. What's your thoughts on PLTR? Hobo. PLTR. Bullish. Hobo. PLTR. And Tesla. I'm thinking Tesla. 400 calls February. Jim. Tesla. 400 calls. I'll get to that. February. Let's do Dom's first. Is it Algo? ALGO? Is it Algo? Double check. ALGS. Let's look that up for you. I'll pull up your stock. Don't be upset if I tell you it's trash. ALGS. I'll show you how I review stocks. Okay, so ALGS Therapeutics. ALGS. It's $26 a share. $26.20. It was up 252 today, so nice big move today. Probably a lot of volume on that. See if I can. If I can't play it for you, I'll read it for you. Let me see.
Updated. 1:30 Business Summary. ALGS Therapeutics Incorporated, a clinical stage biopharmaceutical company, focuses on the development of novel therapeutics to address unmet medical needs in viral and liver diseases. Its drug candidate, ALGS 055009, a small molecule THRSS agonist that is in the phase 2 a clinical trial for the treatment of non-alcoholic steatohepatitis, NASH. The company also develops ALGS 000184, a capsid assembly modulator, which has completed phase 1b clinical trial to treat chronic hepatitis B, CHB, and ALGS 125755, a siRNA drug candidate, which is in phase I clinical trial for the treatment of CHB. In addition, it develops ALGS 097558, which is in phase 2 clinical trial for the treatment of coronavirus. The company has entered into license and research collaboration agreement with Merck to discover, research, optimize, and develop oligonucleotides directed against a NASH. License agreement with Emory University to provide hepatitis B virus capsid assembly modulator technology. License agreement with
Okay, so that's ALGS Therapeutics. What I do, I look at the volume. It's showing me today's volume 400K, not a lot. So it's a light volume. So I don't like that particularly. I look at the 90-day volume. You guys have a stock market account. It shows you all this information here. I have a 90-day volume of 200,000 average. So the volume is too light for me. If I'm going to rate it, ALGS, I'm saying it wrong, ALGS. ALGS Therapeutics. So I like to see 2 million volume a day. So I give it an X for the volume, okay? Volume. And then I give a 5-year or a 10-year chart, which has it been trading for 5 years or 10 years? The answer is no, because it started in 2021. And not only that, but the stock was 700 back in 2021, and now it's 26. So, like, think of investors who had to buy it at $700 a share, and they've lost all the way down to $26. So the stock chart has failed. This is one of those stocks that came out of the gate real hot. It started in 2021 around $300, $400, then it went to $700. And then by 2022, it dropped to $300, and then now it's $26. So basically, on the sacrificial altar. So the 5-year chart is also an X. No 5-year chart. I'm gonna guess there's no PE, which means there's no profit. Take a look. PE dash. If your stock has a dash by the PE, that means you're losing money. PE is X. Do you see where this is going? So like, I shouldn't even really go farther, but let me just show you. There's no dividend. Let's confirm that. No dividend. Dividend X, and then revenue. Revenue isn't a criteria, but I just use the PE for revenue. But the revenue is $6 million, so they made $6 million, which is supposed to be for the year. So they're not making any money at all. It's like $6 million is like advertising on a website. So they're having some problems. I would not invest in them. They have a lot of cool ideas here, drug therapy, right? But I can't do it. There's nothing here to show me that they're doing anything. Also, the market cap, it shows 82 million market cap. So MC market cap. So like you're investing in the value. Your stock is like the value of property in Beverly Hills. $82 million. There's probably not even any employees. Can't do it. I have to do a hard pass on that. Okay. Now, Palantir. Hobbs asked about Palantir. Now, this one I like. Palantir is one of my picks, one of my holdings. PLTR. PLTR today was 67.08 plus 103. It's up to $1.03. Now this one, let me show you the difference. Volume, 30.1 million. Check, okay. 5-year chart, okay. Goes from the bottom left to the top right. 5 years ago it was $20, actually $10. And now it's 66, so it went up 6 times in 5 years. So 5-year chart. Check. Okay, now PE. Do they have PE? Yes, they have earnings. They have PE. It shows a PE of 334. That's a hugely high PE, but at least there is some profit, so they get a check. Now, just to talk about revenue, the revenue for Palantir is $2.65 billion. Okay, that kind of tells you how much money a stock can bring in as revenue. That's for the year, right? The other stock had like 6 million. Like, what are they selling? Candy canes. And then dividend. I know there's no dividend for Palantir, so I'm gonna just put an X on dividend. And the market cap is substantial. The market cap is 150 billion. So that gets a check mark. I like to have a 50 billion market cap. So with just the first 5 check marks, I have 4 out of 5 on Palantir. And the other one, ALGS, I have 0 out of 5. Now, also, one thing more Palantir, they have a great cover call. That's be the 6th criteria. I'm going to show you real quick. You guys, I can pull up your stock, PLTR. And then if you click on options, I'll show you the cover call real quick on Palantir. So you click on all strikes, all months, but we're just going to go next month. Okay, so this is November 29th, right? So the closest 1 month option away is December 27th, okay? So here's the strategy. Buy 100 shares of Palantir here at $67, okay? That costs $6,700. And then you're going to write a cover call for next month, December 27th. That gives you 30 days. And the strike price you want is the 69. 70, this actually the 70. So you're going to agree to sell the shares for $70 a share. So you're going to write one covered call. It's going to be -1 CC December 27th for the 70 strike. And for that, you're going to get paid $250. It's showing $250 by $269. So you're going to get paid $250, okay? Now, so what's happening is you're going to buy shares here for 67, which is 6,700 for 100 shares. Agree to sell them for 70 for next month. Get paid $250. That's the cover call. If it passes the 70, the price, and stays above there, you're going to get cashed out. You're going to get your shares sold for 70. You'll get the cash. But if the shares are below 70 by next month expiration, you're going to keep your shares. And that option that you sold expires worthless, which is good for you. And that's how the cover call works. And then every month you just write the cover call. So show me $6,700, $6,700, and I'll show you $250 a month on PLTR cover call. And let's do the math. Shall we? 2.5, which is 250, divided by the share price of 67.03 equals 3.7% return. Now, mind you, this gives you 3 points of share growth. We could have sold this 69 strike for more money, but I want to give you that share growth. I want you to have share growth and premium, both. So you're getting $250 for your shares a month for every 100 shares, 3.7% return. And the plan is to write 10 cover calls, and you get 37% return for the year on PLTR. And 3 years of that, and you'll have 100% return on your investment. And you get to the point where you have what's called a cash cow position, where your whole investment's paid for. You're still making money every month, in this case, $250. Now, the share price can change, the premium can change, but the idea is to stay with it as much as you can and keep writing that cover call. Even if the stock goes down a little bit, keep writing the cover call, because if you don't write the cover call, you don't get the income, and you might feel like you're stuck in that stock. But the way I plan it is, if you do 10 cover calls a year, let's say you're making 37%, right? So what if the shares go down 10%? You still make 27% return, give or take. Stock goes down 20% in a year, you still make 17% return. So with the cover calls, the theory is that you're going to eventually, you're going to make money monthly and eventually offset any losses you have in the share price. That's what I teach to do. If you're getting $250 on 6,000 investment, then just do the math on that. Some of these stocks are paying 5%, and then I'm going to show you one that's paying a lot more behind me, IONQ. But the theory is that if you can pay all your bills, time in the stock market with these cover calls. Okay, and then the other one is Tesla. Okay, Jim has Tesla 400 calls for February. Now, this is pretty risky because what's happening, let's pull up Tesla. Tesla was up today. Elon is the master. All right, 345, 40, up $12.27. It's a good move, good day for Tesla. Which is to say that 100 shares will cost you $34K, $34,500. So, smaller investors might want to do PLTR cover call 6,700. Bigger investors can do Tesla 34,000. And let's look at the cover call, shall we? Briefly, just quickly. We're doing December 27th. Pull out your option chain. And we're going to do all strikes. So you buy the shares here for $34,500. Let's say Monday. Write the cover call. And now at the money is paying $19, which is $1,900 a month. But I don't want you to write the 345. I want you to find the sweet spot, which means that you're going to write the strike. You're going to agree to sell the stock at the strike where the premium you're going to get is equal to the share growth potential from the share price to the strike price. And by the way, I'm going to post this recording on my YouTube. YouTube is in my profile, guys. And also, if it's over an hour, I'll cut it down. But if it's over an hour, I'll still post it on my TikTok, so you can play it again if you want to repeat anything. I'll post it later tonight. So I'm going to have you, on the cover call, I'm going to have you sell the let's say the 365 is 20 points. The 355 is 15 points. So we're going to sell the 360, okay? 360. So we buy the share at 345, and we're going to sell the 360 cover call for Tesla 1 month out, December 27th. And that pays us $13, $13.10 by $13.25. Nice and tight spread right there. So if you count these numbers here, $1,300, $13.10 is the premium, and then you're agreeing to sell it for 15 points higher. So 15 and 13 is the closest I can get, which indicates a sweet spot. So we're making $1,300 a month on Tesla, okay? We're making $250 a month on Palantir. Let's do the math, shall we? 1310. Get out your calculators, guys. This is, you're just dividing one by the other to get the ROI, return on investment per month. 1310 for the premium for the cover call, divided by the share price of 345.40. Equals wow, that's funny, 3.79%. The same return Palantir is giving, 3.79%. Sometimes these premiums will cool off because the call option buyers are selling, and also the put buyers are buying, and they're kind of like weighing on the market. So people think maybe there's going to be a little correction coming up. But we usually get 5% for Tesla, but in this case, 3.7 is just fine. Again, $34,500 for 100 shares of Tesla. It's going to bring in $1,300 a month, $1,310 a month on the cover call. What can you do with $1,300? Maybe pay your rent, buy some food. You can pay all your bills. You retire in the stock market on these cover calls. Okay, so back to Jim. If you have a 400 call for February, that's way out because Tesla's 345. So you're 55 points out of the money, okay? Which means if you hold that call till February, which is basically 2 months, because we're already going to be December, January, actually 2.5 months. If Tesla's not 400 by February expiration, that call option is going to be worthless, okay? But let me see how much that call option is. February, I'm going to go 21st. I'm assuming you're on the monthly. I think you get one more earnings in that, so that part's good. The February 400 is $20.40. So the February 400 calls are 20.40 by 20.55. That's a great, nice, tight spread right there. So on your Tesla calls, you're paying $2,000 basically, $2,055. Remember the IWM? It was $3,000 for 1 year out option. And that's cheaper than paying $24,000 for 100 shares for the IWM. With Tesla, only 3 months out, it's $2,000, and that's for the 400 strike. Same scenario. It has to go up to make money. Now, if Tesla swings up 12 points again, like it did today, this guy Jim who bought the call option for 20 will probably be like 20, 25, 26. He'll probably make $600 in one day. So you can always trade that call option. You have plenty of time. But if you did hold on to it and the stock dropped, for example, and didn't get to 400 by February, it's worthless. The whole investment is 100% gone. Big fat goose egg. That's why it's dangerous. What I would do if I'm going to buy the 400, I would give it more time. Give it like till April or March. That way you have more time. Generally, when you buy longer out, you have more time. It's not so expensive as far as the time. It's more expensive, but it gives you more time. So a risky trade, but I hope Jim can sell this when the stock swings up, and he'll be okay. I usually go, if I buy a call option on Tesla, I usually go. Now, the previous high for Tesla is 414. 414 is the all-time high for Tesla. We can break 414, it'll probably go to 500, and that's probably going to happen sometime next year. So write that down. 414 is the resistance, is the break point, is the previous high for Tesla. If we can break that, then, Jim and everybody else who has Tesla will be very happy. Probably go straight up. Okay. Questions? A few more questions. Chainlink or SOL? Are those stocks? Tyler? Just give me a stock symbol. I'm not familiar with SOL. SOL, Amarin Group Limited, ADR, $2 a share. I don't do penny stocks. I gotta pass. I know there's no premium. I know there's no PE. PE dash, no PE. That's the problem with penny stocks. I know there's no 5-year chart. Oh, there is. They were 5 years ago. They were $1. And they went all the way. They went all the way up to $22, and now they're back down to $2. No 5-year chart, no PE. So you can see where that's going. I have to do a hard pass on that. Question: Snow. Can I do Snow? Him. Tesla this next week looking good. Aliha. Tesla looking good. I agree. Tesla's gonna be fine. I'll probably be up next week. We'll look at Snow. For him, SNOW. Thanks for the question. Snowflake has been prominent. I don't have any. I haven't traded that yet. Okay, so let me put this on the criteria. Okay, Snow. First I see it's 174.90, so it has a robust share price. Okay, check. All right. Yeah, one check for the robust share price, which is like at least 100 per share. Volume 4.4 million, which is a great volume. I got 2 million a day. Gets a check mark. 5-year charts. Has it been trading for 5 years? Has it maintained? Unfortunately, it looks like it started 3 years ago. I don't have a 5-year chart. I have a 3-year chart, and it was 200 3 years ago. So here's something you guys want to realize. Like, you guys think Snow is hot, but it's lost money in 5 years. So we're going to give it to X for the 5-year chart. No 5-year chart. But it does have a robust share price, and it has a volume. And now let's look at the PE. Is there PE? Is there profit? Probably. Oh, no. There's a dash on the PE. So PE is an X. Not looking good. Not looking good. I know there's no dividend, so we'll just put a 0. So X on dividend. Most stocks don't have a dividend. But if a stock has a dividend, it's better. It indicates that the board of directors thinks you can pay a dividend out to the shareholders, probably off of income, off of some kind of profits that the company's making. So even if it's like 1% dividend, I give it the check mark, or less. So we got robust share price, we got volume, no 5-year chart, no PE, no dividend. How about a cover call? Do they have a cover call? Let me read it for you. Let me see if I can get this thing to read it.
Securities and Exchange Commission 10:44:00.
I think everything's not cooperating.
AM.
Snowflake, company profile, provides a cloud-based data platform for various organizations in the United States and internationally. Its platform offers Data Cloud, which enables consumers to consolidate data into a single source of truth to drive meaningful business insights. Whoever wrote this is a salesman. Build data-driven applications and share data and data products, as well as applies artificial intelligence. Oh, they have AI. They have AI department for solving business problems. The company was formerly known as Snowflake Computing, and changed its name to Snowflake Incorporated. Same difference in 2019. Okay, so again, like, this stock has come down in 5 years. That's a major problem. Probably that people think it's hot because of the AI, because of the cloud data storage. I get it. I was going to do a cover call. If I can at least get a cover call here, I'll give it 3 check marks out of 6. So click on options. Click on all strikes. We're just going to go to December. Okay, so buy the shares here for $174.90. Actually, yeah, $174.80. $174.80. So that's $17K. $17,400 for 100 shares of Snowflake. SNOW. So, like, here's the stock. Even if the stock didn't make money in 5 years, you could have got cover calls for at least 3 years on the stock. And if you're getting a nice percentage return on the cover calls, then that will take care of the share growth. You'll have a profit in this case. So December 27th, you agree to sell the shares at higher than you bought them, right? Let's look at the 180 for 4. 177 for 570. Yeah, that is a good cover call. So the 177 I like, and that is the 177.50. So buy the shares here for 174.80. You sell the 177.50 strike on December 27th, 1 month out, and it's showing we're gonna get 570 by 605. So $570 a month on a $17,400 investment on the cover call. So as in pounds here, we had 6,700 was giving us $250 a month. Tesla at 34,000 was giving us $1,300 a month, and Snowflake at 17,000 is giving us $570 a month. What can you do with $570? Maybe pay for your storage, your car note, gas. Look, guys, I'm just trying to make it so you don't have to work at Walmart when you're 75, collecting receipts at the door, taking orders at McDonald's, because they will hire you. They have a place for you waiting after you retire. So get on these financial plans to make money, at least on cover calls or something. That way you're set. Makes sense? Appreciate you guys. Let's do the math, shall we? Snowflake. Play the calculator. It's showing 570, so 570 divided by the share price of 174.90 equals 174.90 equals 3.2% return. So here's the situation, 3.259. I say this is still a good cover call. I think I missed my little puzzle. We have detected inactivity. You can use team stickers. It's showing we're gonna close in 4 minutes because I missed my little puzzle. But anyways, back on back on these cover calls. Snowflake's giving 3.2% return. Oh, here we go. There we go. I'm back, dude. Thank you guys for hanging in there, man. I'm back. They try to cut my live for inactivity. I'm back. Guys, give me some more likes. Show some activity here. If you want to throw me a crane or two for if you gift, I appreciate you. And then sub is $5 a month. I always take care of my subs first. You subs already know. Some of you guys got my cell phone, blowing up my cell phone. Like, dude, just one question at a time, please. Yeah, and then 2 shares at the bottom right corner. Okay, so Snowflake does have a cover call, CC. So it has 3 check marks out of 6, all right? So it's like, not great, but I mean, I guess if you think it's if you really want to get behind it, if you think it's gonna go up, then I would do cover calls on it. At least give it some share growth, give it some room to grow. And what that sweet spot gives us, in this case, gives us 3 more points for the 177.50. And it's giving us 3.2% return for a month. And then, 10 cover calls a year. That's 32% return a year. Tesla and Palantir were paying us 37% a year. Snowflake's paying us 32%. So that's kind of what your competition right there. Either one is fine. I think I like Tesla the best, and then Palantir next, and then Snowflake the least. There's other stocks you guys mentioned, they're just crap, so just hard pass on those. Questions? Can you check PGHL, please? Thanks. Carlito's wait. What's up, Carlito? Long time, bro. What's up? PGHL. I've heard that stock before. Let's look it up. PGHL. And then I'll probably take 1 or 2 more questions. Then I want to go to this one in the back behind me. IONQ. Yeah, PGHL. I already did this one. Sorry. Penny stock. I don't do penny stocks. Let's look at another one. You guys, just put your questions in here. I'm just scrolling back now. You got Discord. KHRIZ Chris. I got Discord. I do have Discord, but I don't. Actually, no, I don't have a Discord for stocks. I go in other people's Discords. But it's best to get a hold of me through TikTok. You can DM me. We can rap a little bit, talk about stuff. I do one-on-one sessions for $50. You want to do that for an hour? Just DM me on my TikTok. It's the best way to get a hold of me. I also do YouTube, but I think TikTok's my main right now. I'm very new to investing and want to learn a lot more about the markets. Dom, you come to Godric because you want to learn? Okay. Well, like I was saying, if you buy a few shares of this IWM, which is an ETF signifying the Russell 2000 stocks, like mid-cap stocks, lower-cap stocks, that's a good way to start. Just grab a few shares of that. I also have the SPY. That one's like 600. Grab a few shares of that. That way you get going. You can also buy individual stocks. I like individual stocks like McDonald's, MCD, because it's a dividend stock. I like Pepsi, PEP, dividend stock. I like PM, Philip Morris, dividend stock. So these stocks I like. Buy a few shares of the IWM, and when you have enough money, start doing these cover calls to make consistent money every month. Open your account at Charles Schwab Broker. They have a Thinkorswim platform, which is this one here behind me. I like it the best. And you can start going. Every time you get paid, put some money in your stock market account. Consistent deposits every week, every month. Let me look for one more question, then I'm going to jump onto this, what I have behind me. What's your opinion on the... Okay, I got that. Talk about Palantir. I got your Tesla. Good luck on those Tesla calls. Buy, SHIB, or PEEP. Just give me one stock at a time. RIVN, RIVN, RIVN. Caesar, thoughts on RIVN? I'll do this one, then I'll jump to what I want to talk about. I didn't like RIVN when I was looking at it. It's the EV for trucks, but they're having problems. Like, let's put RIVN by our criteria, RIVN. Now I know it has a cover call, 3, 4, 5, 6. I'll do that last, but let me volume 26 million. Check. RIVN stock. Number 2, 5-year chart. It has a 2-year chart, and it's gone down. It was $130 at some point in 2022. It went down to $12. So here's like a failure. I mean, people like physically sick for buying the shares at $130, and now it's only $12. So 5-year chart X, okay, has the volume, no robust share price X. Does it have a PE? PE. I know it doesn't have a dividend, so we're going to put an X for dividend, X, PE. No, dash, so it's losing money, dash. So I only got one check mark for the volume. Let me see if I can get a cover call. I'm sure I can. If you believe in the stock, you know, you're hoping it goes up. It's the 5-year chart is dismal. It's just, you know how I've shown you that chart's going straight up? This one's going straight down. But it's maintaining down here around $12, right? But long term, it's gone down, okay? But let's look at the cover call. Why not? Buy the shares here for it. Now, one advantage on RIVN is it's so damn cheap. It's $12. So you can buy 100 shares for $1,200. I'm sorry, 100 shares, $1,200. Yeah, for $1,000 and $200, you can buy 100 shares and do a cover call. And how much is it paying? December 27th, the 12.19. I would sell the 13. So buy it here for $12.19, $1,200. Sell the 13 cover call, which means you're going to sell it for 81 cents more, which is $81 if it goes up. That's share growth. And you're going to get paid 63 by 65 cents. 63 cents by 65 cents. And it's a contract, so it's 100 shares. So you're going to get $63 by $65. Is that enough? Let's see. Math, okay. 0.63. So you make $63 a month divided by the share price of 12. What is it? 12 something. 12.19. 12.19 equals 5.1%. So it's actually paying more than Tesla, Palantir, and Snowflake. 5.16%. And because it's so cheap, you're probably going to be doing 100, 200, 300 shares. 1,000 shares will give you $600, okay? So, to recap, our RIVN investment on cover call is giving us a 5% return, or $63 for a $1,200 investment. The Palantir gave us $250 for a $6,700 investment. The Tesla gave us a $1,300 for a $34,000 investment, and the Snowflake gave us $570 for a $17,000 investment. So this one actually is the best cover call. But on the 6th point to criteria, I only have 2 check marks, so it's a fail on that one. So I had to advise no. Okay, just because it has a good cover call doesn't mean that it's a good stock. It's not. If it can come around and make some profit, the stock will eventually start going up. But we don't know if that's going to happen. What do we got? We got tariffs to look forward to. All right, guys, I appreciate you. I'm going to talk about, without further ado, big fat money, MONI. Is that Fubo. You guys are throwing stocks at me. Let me just look real quick. Fubo. Penny stock. Can't do it. Hard pass. Money. MONI. Moon Equity Holdings. Penny stock. Hard pass. You guys know what RIVN is? RIVN is EV trucks. I didn't want to have to read it. I should have read it, but I'll read it next time. Okay, so you guys, quantum computers, dude. IONQ took off today. We talked about this a few weeks ago. The new is the real new is quantum computers, and this one is a pure play, which means they just do quantum computers. IBM, Apple, they're all trying to do quantum computers, but they're not a pure play because they sell all kinds of other shit. But IONQ is only quantum computers, so probably it's a takeover target. It's going straight up. It was up $3 today, $36 a share. IONQ. You guys who have the shares smile like crazy today because it was up like more than 10%. Let me pull it up. IONQ. See if I can.
Updated. Business summary. IONQ, Inc. engages in the development of general-purpose quantum computing systems in the United States. It sells access to quantum computers of various qubit capacities. The company makes access to its quantum computers through cloud platforms, such as Amazon Web Services, AWS, Amazon Braket, Microsoft's Azure Quantum, and Google's Cloud Marketplace, as well as through its cloud service. It also provides contracts associated with the design, development, and construction of specialized quantum computing hardware systems, maintenance and support services, and consulting services related to co-developing algorithms on quantum computing systems.
All right, so you got to understand that quantum computing is still in its infancy stages.
The company was incorporated in 2015.
So it's not like they have it all down. They're still kind of building the quantum computers, so it's like in the very first stages. But apparently they have revenue. They're selling something. A revenue here shows $37 million. So they just started selling them. Symbol IONQ, quantum computers. And it's $36 a share. So it doesn't have a robust share price. Has the volume. 23 million volume today. Gets an X. Yeah, check mark. Robust share price X. It does not have a 5-year chart. It started in 2021. It has gone up, though. It has a 3-year chart. It started at $11. So it's gone up 3 times since it started. But I'm going to give it an X for the 5-year chart. It doesn't have PE. So here's the thing. It's risky, guys. No PE. Dash. No dividend. Dividend. Dash. But it has a cover call. So this is like a RIVN. It has a cover call. So I'm gonna give it two check marks out of 6. But what? It's quantum computers, and it was up. Let me correct myself. Up $4.29 today. $36.50 up $4.29 today. And let's look at this crazy cover call, and I'll show you. Guys, I'm giving you all the golden nuggets, man. You're getting it for free tonight. All right, let's buy the shares here at $36, $36.50 actually. 100 shares will cost $3,650. But look what you can do. Sell the cover call for the December 20th, 1 month out. In November, write December. In December, you write January. January, you write February. Every month, we're going to do this. How much do they pay? At the money, they're paying 37 is paying $3.95. 38 is paying $3.85. Let me see. The 40. Here we go. We'll sell the 40 cover call. Why not? Buy the shares here at 36.50. Agree to sell for 40, which is way up for next month. Gonna get $3.35. $3.35. That's for 350. So that's the sweet spot. 335. Okay, now that's almost 10% return. Let's do the math. 300. That's $335 for your investment. $335 every month on a $3,600 investment. 3.35 divided by 36.50 equals 9.178% return. 9.178% return, which is per month, and then 90% return, 91% return for a year. Do you see where this is going? You get your 10 cover calls, and it's just so hot, you know. So I think it's probably going to go to 40, 45. And like I said, it's probably going to be a takeover target at some point. They're going to pay a premium for the stock. It's going to be bought out by someone, Microsoft or somebody, and IBM or somebody. And meanwhile, just write the cover calls. But let me show you the cover call behind me, why this is important, okay? What was I going to get to? Oh, so it's a high risk. You know, these kind of stocks that are so hype, right, up $4, it could come down as much as, let's say, 50%. So if you buy the shares at $36, don't be upset if it gets cut down to $18, which means you'll lose half, right? That's just like a correction in the stock because it's one of these high volatile stocks. And here's the thing. If you write cover calls, it might be okay because if you did 10 cover calls, it's showing 91%. Even if it went down 50%, you're still up 40%. Do you see the math, how the math works on that? So it's almost like it's hard to pass it up. And I want to show you this behind me. Go all the way out, far as possible. You guys that know how to pull up the option chain, know what I'm talking about. Go down to, you know how we're going out 1 month on the cover calls? We're going to go out all the way to 2027. And that's showing behind me is showing $17 for this one's for the 40 call, right? Oh, by the way, on all these cover calls, like when people do cover calls, I'm gonna just say they don't do them right because they try to sell the cover call at the money, but that's wrong because you give yourself no share growth for that. You allow yourself no share growth because when you write the cover call, you give away the upside. So you don't want to have no upside, but then you have the downside. The stock goes down. You have the downside always. So that's the wrong strike to write it at the money. Even if you get more money on the return, your best strike on the cover call is going to be this sweet spot that I've managed to create, which is where the distance from the share price to the strike price you write is equal to the premium you get. It always allows for share growth, and at the end of the day, after you do so many of these cover calls, the best return is going to be the ones that allow for some share growth and premium both. That's what I'm trying to show you. That's the strategy I'm showing. That's the technique. I want to call it that. And here's what you do. You're going out 777 days. Okay. You're gonna buy IONQ here for 3,600, 100 shares. Write the cover call for the 40. Here is showing 17 points. What does that mean? Because why? Let's do the math on that. 1743 divided by, now it might show less than that actually if you pull up the chart, but it was showing that in the middle of the day. So sometimes these prices move. Right now it's showing 1645 by 18. So I was doing 1743 on a limit order, which is right in between, which is you're allowed to do that, high volume stock. And it took this order, by the way, today it went through. So 1743 divided by the share price of 36.50 3650 equals 47.7% return. 47.7% return. Okay, so here's the value of this. Because, okay, so if you have a margin account, you only have to pay half for your shares, which is 50%. Okay? And the other portion of your investment is on margin. Okay? Now, I'm not saying to go on the margin. I'm just saying to do a margin trade, because what they're going to do when you buy 100 shares, they're only going to take about half of the cash, so like 18 points. Okay? We can get 1743, basically almost the same amount you're going to be charged on your margin on this cover call. So what that does, it generates what you call a free trade. Free trade, which is to say that buy 100 shares here, IONQ. Now, don't do this, but look into it, because it is a risk. The stock's obviously high risk. But let me look at this return. You're going to get around 50, just shy of 50% return. Okay, now you put a limit order for 18 points, 1825. You could actually get 50% if it takes. Probably will take. But just showing the bid ask here, if you put a limit order 1743, you're getting 47.7%, 48%, almost half. What that does is you're going to invest 3650. Write the cover call all the way out. You're going to get 1700 back, 1743 back. That allows you to do what? Buy another 100 shares, 3650, and only pay half because it's a margin trade. So now instead of 100 shares, you'll have 200 shares, and they'll be paid for just shy of a few bucks. So it's like a free trade. It's like one of these loopholes you can do in your account. Don't do too many, because eventually you'll put yourself into a margin call. But if you're getting back enough money to pay for another 100 shares, you guys do you guys still use this math? Just do it on paper. Just don't take my word for it. Do this trade in your account. See that the money's gonna be put right back in your account when you do the cover call to buy another 100 shares. Test it for yourself. You guys that I've been talking to on the sell, you know how this works. We've already done it. It's a done deal. I'm just sharing the knowledge. Thank you guys. I think we're gonna wrap up. I'll look at a couple more questions. Appreciate you. Thank you for the likes. Just a few people in here now. You guys want to throw me a sub? It's only $5 a month. I'll make sure I answer all your questions. You can come up in my lives, DM me. Just one question at a time if you DM me. But I'll show you how to do these cover calls, how to pay all your bills every month, and retire into the stock market. Appreciate you guys. Be back on Monday. We're in a bull market. If you want to buy a few shares, we talked about some stocks. Talked about Palantir, talked about Tesla, talked about Snowflake, and then IONQ. The dividend stocks I like is PM, MCD, and PEP. Talked about diversifying with IWM, Russell 2000, popular one, and why that's good to diversify. Thank you guys. Appreciate you. Godric out.